Hello everyone, I'm Fauzi, Chief Investment Officer Equity Malaysia. My colleague Mr. Tan Jitun, the Chief Investment Officer in Singapore, has talked at length on the COVID-19 pandemic which has spread beyond Asia. So now let me focus on our domestic equity market. Equity markets have fallen sharply across the globe over the past few weeks. We are in unprecedented times as fear has become the dominating emotion and there is a crisis of confidence all around. KLCI was holding well even after the lockdown on Wuhan from 23rd January 2020. The CI started to fall significantly due to the political uncertainties when Pakatan Harapan government collapsed and Tun Mahathir resigned as the Prime Minister on 24th of February. The index continued to slide by 4.2% until after Tan Sri Muhyiddin sworn in as the 8th Prime Minister on 1st March 2020. However, the index continued to fall when Brent tumbled 9.4% on 6 March to US $45 per barrel, the biggest daily drop since global financial crisis. The index continued to slide significantly from 11 March when WHO announced COVID-19 as pandemic. Subsequently, Tan Sri Muhyiddin announced the implementation of Movement Control Order on 16th of March to be effective from 18th of March and followed by announcement of stimulus package of 250 billion and later an additional 10 billion stimulus package. The index dropped by 14.4% from 11 March and closed at a low of 1,219 points on 19th of March 2020. The COVID-19 pandemic has caused uncertainty in the recovery of the economy. Even World Bank is also not certain when the economy can recover. It depends on the COVID-19 pandemic will end and also countries across the world will start lifting the lockdown. The lockdown not only disrupts the demand but also supply. World Bank forecasts Malaysia baseline at minus 0.1% and lower case at minus 4.6%. The concern on Malaysia going forward is whether oil price will remain weak since Malaysia is a net exporter of oil. Malaysia may have limited ammunition if the COVID-19 pandemic prolonged and country to be under lockdown. If we base on past experience, every US $10 drop in crude oil will reduce government tax revenue by 4 billion and total revenues include Petronas dividend by 7 billion. This will have an implication on budget deficit. Budget deficit number will likely to increase to higher than 4% as targeted by the government. As we know, FBMKLCI has fallen significantly over the past 2 months and the index closed at 1,219 on 19th of March. A drop of 369 points or 23.2%. So at which level the index will find its possible strong support? We take a look at the market cap to GDP calculations to find out where would be the possible strong support. It is difficult to gauge what would be the market capitalization going forward due to the uncertainty in the economy. We use 2019 GDP numbers as the base year and use historical market cap to GDP factor during global financial crisis in order to determine the possible downside of KLCI index level. During GFC, market cap to GDP dropped from 4.43 times to 2.43 times or 43%. Assuming same magnitude this time round, market cap to GDP will drop from 3.25 times to 1.85 times. Based on the table, the index should find its strong support at around 1,000 index level. However, should the market be supported at GFC level, based on market cap to GDP of 2.53 times, the support for the FBMKLCI index level is at 1,194. Based on our calculation, the index has factored in a 12% drop in corporate earnings when index was at 1,219 level. If the market drops to 1,000 index level, the market is anticipating a drop in corporate earnings of 28%. Typically during recession, the market corporate earnings growth will drop by 20% to 30%. So what we have done, we have raised cash for all funds between 20% to 35% for both conventional and Islamic funds in order to protect the fund's net asset value. We believe the current fall in the market presents an opportunity to add equity exposure. We know that market will come back from every correction and eventually make new highs. The current correction in the market provides investors a huge opportunity to increase allocation to equities with a medium to long-term view. Should the number of reported cases and deaths globally continue to go down, we are of the opinion that the equity market might has bottomed out. However, if the number starts to rise again, we are of the opinion that the equity market would test again the lowest level on 19 March. Thank you.